Market news now. Asian equities rose for a third consecutive day to their highest in 2 weeks, while the dollar wobbled as weak U.S. labor data bolstered bets that the Federal Reserve was likely done with its interest rate hikes. Overnight, Wall Street ended sharply higher, while Treasury yields slid to three-week lows after data showed U.S. job openings dropped to the lowest in nearly 2.5 years in July, signaling easing labor market pressures. Meanwhile, building materials retailer Cashbuilt posted a 37% decline in headline earnings per share as the business sees a drop in consumer activity. Cashbuilt says that the tough trading conditions have dealt a significant blow to sales for some of its major product ranges. To give us more perspective and analysis on the markets, we are joined by Chantal Marx, who is the head of research at F&B Wealth and Investment. Chantal, thank you so much for your time. How are you characterizing market sentiment then on the back of the job openings data that we got out of the US, as well as consumer confidence coming out of the States?
Market sentiment is extremely mixed at the moment, actually. So we actually initially saw a really positive reaction to that weakening jobs market, because the idea is that a weaker jobs market means that we'll get interest rate cuts sooner rather than later. But we have actually also this morning seen a higher than expected inflation coming through from Germany. And that has now again upset the apple cart, because it means that the ECB will probably have to be restrictive for longer. So it's a delicate balance at the moment. And I think that the uncertainty is also showing up in volumes that have been quite weak, both in the local market as well as offshore.
It's been a busy morning, especially on the earnings front locally, whether you're looking at results coming out of Woolworths, Stadia, Bidcorp, Blue Label Telecoms, you name it. There were quite a lot of numbers out. But let's focus in on Woolworths and Stadia and start off with Woolworths. The CEO describing basically the disposal of David Jones as transformational for the group. When you look at those numbers that Woolies brought forward, what stood out for you?
Well, the David Jones purchase consideration was disclosed for the first time, and it was actually a little bit lower than expected. But I wouldn't harp on that too much, because the important thing, and I agree with the CEO here, is that they are rid of David Jones. David Jones was a massive drag on their balance sheet. It took up a lot of management attention for very little return. Now the business can actually focus on Woolworths Food, Beauty and Home. That's been recovering quite nicely. The food business that is also holding up quite well in very challenging macroeconomic circumstances, and the country road business that has been ticking along quite nicely in Australia. In the results presentation, management provided an update on the first few weeks of trading in the new reporting period, and the South African business is performing very, very well. I think particularly when you're considering the context of high inflation, lower disposable incomes, and other pressures on the South African consumer.
Let's focus in on Stadia. They also released their earnings. What did you make of the numbers, and how do you see Stadia as a perhaps long-term education play given its light asset nature?
It was an incredibly strong set of results. I think as you kind of read through the results, each number just looks, or one number looks better than the next number as you go through it. I think I still quite like Stadia from a longer term perspective. I think what really comes through in these numbers is that distance learning is becoming more prominent, but it's also democratizing education and higher education in particular. So I think as long as they can continue rolling out these solutions, they should continue to have support for learner growth. And because of that capital light model that you referred to, that will ultimately filter through to the bottom line. So still a stock I really like right now.
So we started off the conversation having commented on the jolts which we got yesterday and consumer figures, but we still have two data points before the Fed meets in September. What's your expectation, given that the Fed has said that the interest rate path is going to be data dependent?
It's been so interesting to look at the probabilities attached to interest rate hikes in the US by the market. If you looked at the probabilities on Monday, most investors were looking for a kind of high probability of a pause in September, a small probability of an increase in November, but cuts to only come through towards the middle of next year. After the JOLTS numbers, that actually changed quite substantially. So investors are still thinking a pause for September. They're now putting a higher probability on another pause in November, but for interest rate cuts to actually start coming through sooner than expected. I think it's going to be very interesting. A lot is going to depend on what inflation and inflation expectations look like. And of course, one data point does not a trend make. So I think that the Fed will take that into account as well. Our sense is that the Fed is done with its hikes, but of course, anything can change.
All right, Chantal, let's leave it there. Thank you so much for your time and just commenting on the share price movements of the companies that we just spoke about, looking at Woolworths down 0.9%, Stadia also down 0.5%, and Cashbuild down 2.6%. And this is on the back of what we mentioned, the company seeing lower consumer activity.